We get started. All right. Well, welcome everybody, Friday Night Lights. Glad you guys could all join. I appreciate you all spending your Friday with us. I know a lot of folks would do a lot of other things on Friday night, date night, whatnot. But we are glad that you guys are all here. So, folks who are new, we run this call every Friday night. We've run it for almost 2 years now. And the purpose of the call is really for us to give back to the community, to bring things that we've learned, mistakes that we've made. We bring speakers and guests, anyone that we have contact with, events we've been to, information that we have. We try and share all of it for free. We do this every Friday night, for the most part, outside of holidays. But every Friday night, we are here to give that information to you. So, with that, always like to give a disclaimer. We are not SEC lawyers. We are not tax accountants. We are not financial planners. So, all the information here is for informational purposes only. We do this for training and education. And you should always, always, always do your own due diligence on anything to make sure that you're doing the best for yourselves. So, like I was saying before, when some folks first joined, every once in a while we like to do a bring a deal type of event. We are going to allow people to bring deals, to present different things, to ask questions. If you are a little nervous about presenting, you can do it in a smaller group. You can get feedback. If you have a deal and you want to execute on it and you want some feedback on the numbers, you can do that as well. So anything that you can come up with from a deal standpoint, we do this, try it every 4 weeks. Sometimes it goes 6 weeks, but we really try and give that opportunity back just more or less for kind of like a Q&A and ask about deals and your particular deal. And so that's what we're doing tonight. We have two people tonight that are bringing their deals. One is coming at 7:30 and the other one's at 8. So before we go into that, what we normally do is do updates at the end of the call, but we're going to do those in the front of the call tonight. So the first thing that I want to share is we have a debt deal that we had been working on, and you'll see my screen. All this stuff pops up. Okay. So we have a debt deal that we started about a month and a half ago. It's basically a short-term loan against the properties that we own. And so the way the debt deal works is you invest with us for 12 months. The money is used to upgrade the properties and to put back in to get better returns on those properties. And then we will pay a return based on the amount that you invested with us. So we do 6%, 8%, 10%, and 12%. Like I said before, 12-month term, and it has monthly distributions. At the end of the 12 months, you can take your money out, you can keep your money with us. We also offer, because we continue to buy properties as we're going along, and we're about to close on one of our properties called The Haven. Once that property is closed, we move on to the next one. And so maybe you like the next one. So you could actually take your money and move it into one of these equity deals if you decide you want that. You don't have to necessarily wait the full 12 months, but we'll credit you and move you over into that equity deal. So it really gives a lot of flexibility to our investors. You want short-term liquidity, you want some interest while your money's kind of sitting around. It really just gives a good opportunity to do something different other than to tie your money up. Or if you're not sure yet and you want to just hold it, this really gives us an opportunity to offer something else. And we actually made our first interest payment this, what, Wednesday. So every 15th of the month, we do monthly distributions. We paid out over $7,000 in interest payments on $600,000. So it's over 6% average return on everybody's money. Now everybody's at different tiers, so they each got different amounts, but ultimately the returns are there, they're steady, and we made our first payment for those returns. So I know some folks here are invested in it and they've actually gotten some of those returns. So it's kind of a cool thing because it's a new product. It's a creative idea that we came up with, and we've actually made our first payment. we're also going to have more and more momentum. A lot of people are interested in this, and so it's one of these things where at some point we'll have to close it because we'll just have too much money into it. So if you are interested, just let us know. All right. Um, Teresa and Tim, you guys went to an event. Do you want to talk about that?
Tim, go ahead and start.
You go.
Come on. We
Ladies
went to
first.
Dallas to the Richard Wilson Family Office Club. Do I have it right?
Yeah.
Yeah,
Yes.
event. Okay, so it was my first event with Richard Wilson. And it was interesting. The very first guy that Tim and I talked to when we got there, he said it's kind of a learning curve. There was probably, what, maybe 150 people there, Tim? Is that
Yeah.
fair?
Something like that. Yeah, I would say.
Yeah. And so the first guy we talked to said it's kind of a learning curve. And I, immediately said, what do you mean by that? And so he's like, well, you just gotta, everybody's kind of different in how you talk to them. And as we all know, the best way to learn is to, you know, do it wrong the first 5 or 6 times and then kind of learn how to say it. So, I mean, the first guy said, so what do you do? And I said, I'm a deal sponsor. And he goes, a deal sponsor for what? And I'm like, oh, right. This isn't a real estate conference, right? So I had to kind of rethink a little bit. But it was very interesting. It was one day. It was 10 a.m. to 4 p.m. was the actual presenting time. We had 22 speakers in that period of time. Each speaker spoke about 10 minutes. So it was kind of like a TED Talk type situation. Um, so it was super good. Of course, the best part is just the people you meet, right? So Tim and I talked about probably the most connected that we got were to a person in O'Fallon, Missouri, Kansas City or Overland Park, Kansas, and St. Louis, Missouri, keeping in mind that I live 2 hours from St. Louis and Tim lives in Kansas City. So we went all the way to Dallas to meet three people
Yeah.
from
Who live near
our
you.
area that we really connected with. But we never would have met them had we not went to that. They were
Yeah.
very, great guys, and we really enjoyed meeting them. But so many great people. A lot of this conference was very unique because there were quite a few medical people. And a lot of people there were capital raising, but for other things, not just for real estate. One guy I talked to was creating hyperbaric chamber clinics. One guy was working on a gluten tester for, testing gluten at the restaurant, like on the go kind of thing. And one guy was doing a valve so there's quite a few medical. So it was very interesting to be outside of the real estate realm. That was my biggest takeaway. So, okay, Tim, I set you up. Did I take everything for you? Now you don't have anything to talk
No,
about?
you actually left out one of the best ones, and I'm glad because I want to
Look,
talk about it.
all right, I'm
So,
saving it for
so
you.
to give you an idea of the range of people there raising capital, we met one guy. We were coming up on the elevator and said, "So, what do you do?" He says, "Oh, I'm walking across Africa." And the first thing
What?
Teresa and I thought was, "Wait a minute, did we take a wrong turn somewhere?" I mean, I thought we were in Dallas. Anyway,
So, of
uh,
course,
what'd you say?
I said, sir, I think you're confused. You're in an elevator in Dallas, Texas,
Yeah,
not in Africa.
yeah.
He's like, oh, okay. Yeah, see, you're really super smart.
So
I
yeah,
said, smart
so he was
ass
kind of
is what you mean.
he was kind of taking a hiatus from it for a bit to come to the States and come to this event because he's raising money at the same time. He's doing it to bring awareness and to raise money for solving the global water crisis. And so he's trying to walk across 5 continents. And he said, I know, because he already knew we were smartasses, right? So he said, I know there's 7 continents, but he goes, I'm not going to walk across Antarctica and whatever. I don't remember the other one. I guess the other one. So anyway, so yeah, that was uh, caught me completely off guard. That's one I'd never heard before, and
And how
very
did he
interesting.
build his wealth, Tim?
I don't remember. How did he build as well?
Real estate.
Okay. Yeah.
Yep.
Yeah. He
He
said
built it in real
basically
estate.
he built enough to that he didn't need any more. And and so he's taken the time to do this now. So he's basically a philanthropist now, which is where people who are uber rich, that's where they get to, and that's what they do at that point. So, but yeah, he kind of proved his point too, because I went to the restroom at one point and he was in there barefoot carrying his shoes around. And during the conference, he walked around barefoot. So, so I asked him, we went to an event afterward, and he was there barefoot too. And I was like, so do you walk across Africa barefoot? And he said, actually, I do quite a bit until my feet actually get a little worn out. And then I put shoes on. I was like, okay. So he's a professional walker, I guess. So anyway, um, yeah, and then so the guy that Teresa was talking about that we met from the Kansas City area, it sounds like he has his own family office. In addition to running, I don't remember if he said is the biggest roofing company or one of in the country. It's like over $100 million roofing company. He actually buys other roofing companies and rolls them up, and he also has developed some kind of application for each of those really, for a roofing company, the ones that he buys as well as any other one to kind of run their business off of as well. So very good contact for us. So uh, yeah.
It's not on your wife's bucket list, Kevin, to walk across Africa or any continents. Is that what you're saying?
Anywhere further than the shoe store, I think.
And I would assume the other continent, he's probably not walking across Asia, because I would assume that's probably a long walk.
I don't know. I mean,
I mean, they're
I
all
would.
long walks. Let's not kid.
I don't remember him saying which other one he wasn't going to walk across, but unless it's the United States, or I mean, or North America, I don't know.
Yeah, I don't know.
Figured that'd be the easiest one.
Yeah. Yeah, it was a good trip. We both got delayed on the way out. I flew out of St. Louis and Tim flew out of Kansas City, but definitely very interesting to hear people like once you realize that really most people were there to capital raise, that's what they were there for. So once you realize that, then it was like I said, you learn learning curve, and then you
Well,
were,
and they did talk. There were a few people that were actually managing family offices, and that was actually a little eye-opening as well to hear actually somebody managing a family office. There was one guy he's managing one that actually was established back in the 1800s, and I don't remember if he said it was fourth or fifth generation, and they're out of a family from the Netherlands, and I think they said that they actually have employed, what was the percentage of the entire Netherlands population? Like a huge percentage.
yeah, it was like 25%. They had
Yeah,
2.4 million in population in this community, and they had given 600,000 jobs in that of those 2.4 million people.
yeah,
So, and that's the family office that existed forever. But he was interesting to talk to. We had talked to him prior to him
yeah.
going on stage, and then he also presented.
Yeah, and they basically, when you hear about, especially the longer that a family office has been established, the older it is, the harder it's going to be to ever get in with them because they're very relationship oriented. So unless you actually know somebody, in the family office or that runs it, or one of their circle, one of their inner circles that works in it, it's very unlikely that you'll get in them. A newer one you might have a little better luck with, but you really have to know somebody to get in with them. And some of them are very particular about what they invest in, and so that was, and they're also very usually oriented toward very large projects, probably much larger than what most of us will actually be doing. So, but it was kind of surreal being in a room with people talking about that kind of money, and they're around it like, they're talking about, $1 billion like I talk about a $5 bill, so.
Yeah. There was two ladies that we met that were raising for data centers, and they said, well, we kind of have two different projects going on, and the one's a lot smaller than the other. We're only looking for what they say, like 10 to 30 million or something. The other
Yeah,
one was 100 to 400 million is what they were raising for that. So these are not, small, but everybody who was on stage had either a company that was valued at over 100 million or had raised over 100 million. So yeah, it was definitely a crowd that I'm not used to hanging around. That's for sure. No offense, guys. No offense.
Yeah. None taken.
so, but So what I was talking about earlier about the Jetsons type house, I'm gonna share my screen and show you. There was a booth there where people were showing. It's called Ocean Builders is the name of the company that they're doing this. That's doing this. And oh shoot, this is a forgot what they call it a sea pod. This is actually a home. And it's a floating home. It's actually one that is not anchored to the bottom of the where the water is. It actually floats, and but it has a foundation under it. And she told me how they, of course, me being an engineer, I was asking about the foundation and how the thing works and all that. And so she showed me. But this one, actually, the CEO lives in this one some of the time. This one is $7 million. But the reason I thought Jetsons, I was like, kind of looks like that, only maybe not quite as high.
Does
But
it
the
spin around? Somebody's asking. I don't think did it spin?
no,
I don't think it spin.
it does show some other views though. The interesting thing about them though is they are now building, and I just want to see if they have it here. They are building
I bet they
floating,
don't.
they're building floating apartment buildings. I hope they have. Yeah, this picture is not their latest one.
How many units?
That she didn't know. I mean, they're kind of just beginning they showed she showed me some pictures of where they're beginning the construction of it. They call it the foundation, but it's really kind of like it looks like a barge. Um, but she never did say how many units or what the cost per units were because they really are so pretty early in the process. But they thought they would hopefully have them completed by the end of the year, and have a better idea on that. But I'm going to follow up with them because I just want to know more about them.
Where is this one located? The CEO or whoever that was that's living in it.
So that one I think is in the she I was kind of confused. I was confused
Maldives.
because he said the
Maldives.
Maldives, but then I thought she said this one that they were showing was actually in Panama. So
Yeah, that could
or
be,
the
but they're generally their basis was Maldives. Because my question to her was like, how do you sell the ocean? How do you? And she said that the Maldives actually own. It's almost like a right of ownership. You know how you have we own half the road or whatever. They own that, and so you truly are buying. And then she said it's like a 99-year on the water lease, basically, is
Yeah.
what it comes down to. So.
and if you ever want to move these somewhere else, you can literally move them. You can just hook to them and drag them somewhere else.
So Tim, you said they're floating, but then you also said it has a foundation. What are you talking about, the foundation?
It's a they call it a foundation because it's got a metal structure underneath that you can't see that they call the foundation that this part sits on, and then it does have concrete blocks. I'm assuming those are like the anchors that hold it down, but somehow it manages the floating so you can't tell that it's floating. She said even if the water gets extremely rough, she said you can just barely feel the movement of it.
That's awesome.
So it'll be interesting to see because the apartments are much bigger than this. It'll be interesting to see how if they're going to be able to achieve the same thing with those because they're going to be floating as well. So yeah,
How
when she
much do
said
how much do those cost?
just this one here alone, this was not. So I don't know how much this one is, but they have a newer version, and I can't find a picture of it. The newer one is $7 million.
Ooh.
Yeah,
Not affordable housing.
No,
no,
definitely not. Not Section 8.
Is that include all the anchoring and all that stuff? Do you know?
yeah, yeah. It's all
Interesting.
it. They put it together, but it basically comes as like one unit, basically.
Hmm.
And if you wanted to buy one, they would send you there and let you stay in it to try it out if you were going to actually consider buying one. So anyway, that was another interesting little venture we found while we were there.
So
Can you
Catherine's
see those?
asking, Yeah.
That's the apartments.
Yeah.
So is that 2-story?
Yeah. At least. Yeah. It
Tim,
might be.
Catherine's asking if they're portable enough that if the weather gets really bad, like a hurricane, if they can move them onto land for protection.
They don't move them. They said that they're designed to withstand storms like that. So
Do you remember the miles per hour that she talked about in a hurricane?
no, no, I didn't ask her that. And they also do, they probably have.
They shut it all down with metal over the
Well,
windows and all that.
well, one of the things that they do is they said that they put the ones that they're putting in now are in places that aren't susceptible to things like tsunamis and that type of thing.
Okay.
So they'll probably have recommendations or things like where they don't recommend you put one, something like that. Um, but yeah, I mean, I didn't get that deep with
Yeah, it's interesting.
other people started coming up, and so I didn't get to finish the conversation with her.
Well, that was a fun trip,
Yeah, it was.
fun conference.
It's awesome. All right. Um, any other updates that we want to provide? Because I see Charles join, so I know he has some deals he wants to walk through. And then I know we have someone coming at 8 o'clock. So
Tim and I scheduled some
Oh,
property tour visits for next week.
yeah, I forgot about that.
Uh, yeah, we've got so much going on. It's hard to keep track of the stuff, but what do we have? 3 scheduled next week, Tim?
3 all on Tuesday, so that you could just make one trip over here. Yeah, we're looking at
Yeah.
we have tours scheduled for 2 of them, and the other one is 100% occupied. They had officials tours for it yesterday, and so they said they couldn't guarantee that we could actually get in any units on the other one Tuesday. They're going to try to, but right now we may just have to drive by it and maybe take a tour of the clubhouse. So it's a townhome property.
Is that in Kansas
Oh,
City?
Yeah,
yeah,
all 3 of
Kansas
them.
City.
Yeah.
Hmm. Barbecue. Arthur Bryant's. Hmm.
that's right.
Q39.
You need a tag along? I can write off a trip to go get some good barbecue.
There you go. Absolutely.
All right. Well, we're excited as a group. Again, made our first payment. We're hitting these conferences. We're really trying to network and continue to do that. And we suggest that you guys do the same. Like the more people you meet, you never know what that next contact holds for you. Um, Doing the tours, we have a bunch of properties that we're about to make offers on, as well as we're closing one. So a lot of exciting stuff happening for us. And we want the same for you guys. So Charles, I think you have some deals that you would like to present to us. So I'm going to give you the floor. And why don't you, I think you said you had two, right?
I do have two. I can pull the second one up. I'm really going to push on one because it closes at the end of the month. So I'm
Okay.
I'm I'm under a push to get anybody else in that wants to get in. So,
Let's see it.
all right. Let me see if I can share my screen with everybody. All right. Everybody see that okay?
Great.
Yes, sir.
All right. This is Devonshire at Lake Dallas. Okay. Uh, I'll get to the lake name here in a minute, but one of the things I'm really getting Omega Property Investments is really starting to gain some traction here. We're gaining it on trustworthiness, transparency, and making sure that in arranging our deals so that they fit what our investors need. One of our things is I'm not here just to sell you the deal. You're going to entrust me with your life savings. I'm going to do everything I can for you. So we're really pushing. We're really our foundation is the stewardship of other people's money. So with that in mind, Devonshire Lake Dallas. All right, this is kind of our little blurb here. This is an investment. It can lose money if you it still has that potential. Um, so there's that. Okay. Investing other people's money, like I said, we're taking that really serious. I'm kind of going with a lot of the lessons that I learned while I was active duty in the Navy. I spent over 33 years in the Navy. I did 10 years in the VA, and some of the things I really learned was, preparation, clear communication, and accountability are not really optional. So those are kind of our foundation cornerstones that we're going on. All of the information in this is provided by the sponsor, which is Momentum Multifamily, and we'll introduce them in a minute. Um, so that's what the information we have to go from. Purchase price 22,400,140 units. It was built in 2015. Right now, they're planning 1.81 million capex, and that's going to go a lot into renovation. They found a lot of renovations. This place really hasn't had a lot done to it since 2015. It's still very nice, very pristine, but it needs some upgrades. Target hold is 5 years. There will be cash flow on day one. Uh, Sponsors are taking over a 3.18% fixed rate HUD loan. 100% of the interiors create a phased renovation so that they can renovate them during turnover. 28 of the 140 units are subject to LURA restrictions, but that gives us a 50% tax abatement. Acquisitions. The acquisition of this property is about 25 to 30% below sales comps in the area. Located Dallas-Fort Worth Metroplex. It's north of Dallas. If you know where Lake Lewisville is, it's just north of Dallas, almost in the center, which gives it really good access to Houston and surrounding areas. So you can pretty much go Houston, Dallas, whichever way you need to go. Some of the reasons that we selected this to go along with is the quality of the asset. It's built in 2015, primarily a brick exterior, large floor plans, unit washers and dryers, broad amenities package. Visible value add. Like I said, this place hasn't been messed with since shortly after 2015, so their units are due to be upgraded and renovated, which we can increase the rent. Cash flow before renovations. Sponsors describe the Devonshire is stable cash flowing as of day one rather than having to wait for a complete turnaround. Experienced operating team. The team that the Momentum Multifamily has over 350 million assets under management, 3,200 doors, and they've had 9 full cycle projects. So they are experienced, they know what they're doing, and they've been there, done that. So it's a good group that we're getting in with. Also, the way I got this deal was from Tim Mai. So Tim Mai, being the godfather, one of the godfathers of fund of funds, he these guys are one of the guys. He has like 1 or 2 people that he'll take a deal with kind of sight unseen. If they say we've got a deal, he'll take it and start a fund for it. So this is one of the teams that he does that for. So that gave me a lot of confidence as well. Downside support, we are below the market basis, fixed rate debt and tax abatements, working capital, phased renovations. They've got a good business plan laid out. Clear investor process. offering documents, subscription materials, and everything were given to us, the second we asked for them. So they were really helpful with that. Dustin and Hayden. These two guys are Momentum Multifamily, and like I said, they've got 350 million under assets under management, 9 projects that they've seen go full cycle. Um, Dustin has raised over 108 million in equity, and Hayden's raised 96 million in equity. That's as of the date this was published. So, all right, there's more on them. Strategy, their base strategies, they go for Class B or A prop assets in the Houston, Dallas area. And Houston, Dallas area is actually going crazy right now. It's probably got one of the highest, or the highest turnovers going right now, our highest number of units for sale. Um, and one thing that's really nice about it is they manage everything, and it's right there. They can do weekly visits. They can drop down there in a heartbeat if they need to. Dallas Lake, Devonshire, formerly the Lake Shore is what it was called. Lake Shore in Dallas, Texas. Is 100% untouched value add, just like we were saying. 140 units, Class A property. Um, Strong home prices in the area. Home prices in the area are averaging about 300 to 500,000 a house. Um, so this is a prime value add piece of property. Purchase price again, 22 million, 140 doors, built in 2015. $152 per square foot. Price per door is 157, 142. Class A equity, looking at 2.16. Everything goes. Class B multiple is 2.07. Those are the packages that they've got together. Class C is 1.98. Hold period is 5 years. It's a value add property. We're going to go on here and see the returns here in a second. Excuse me. Expected distributions start in about 1 to 3 months. Rehab budget, like I said, was 1.81 million. The 50% tax abatement, 20 of the units are at 50% AMI, and eight units are at 30% AMI. So which gives us that 50% tax abatement. This means lower operating expenses, increased cash flow, higher DSCR, strong loan performance. We've assuming that HUD loan at 3.18%. Is going into the value add. Some of the renovations planned, in addition to the interior renovations, which is about $1 million. They'll go through and they'll renovate them at turnover. New renovations plan include new signage, new monument, interior upgrades at turnover, parking lot maintenance, exterior paint. They're going to renovate the clubhouse. A lot of the renovations, he was showing pictures before and after of the clubhouse, AI pictures afterwards, of course, with the new paint and the new scheme in it. It was really nice. And then refresh and add amenities to it. Cash flowing strong, performance asset, long-term consistent ownership. It's a one owner. Owner's been in place since 2020. Excellent cash flow, low fixed HUD rate loan at 3.18%. Each unit has 9-foot or vaulted ceilings, depending on which floor it's on. Washers and dryers included. The rents that are in place right now are below the market rents in the area, so they very easy to raise those a couple $100 a month. Location, North Dallas, Fort Worth, Metroplex, construction 215. Investment overview, 140 units. Average unit size is about 1,029 square feet. Total area is 7.3 acres, 90% occupied at the moment. In place rent per square foot is $1.40. In place rent is $14.38. Here we go, the capital stacks. All right, investor distributions, 8% preferred interest to investors Class A, which is 500K minimum, 90% after that. Class B is 150. I'm sorry. Pardon me. Class B is 150K minimum, 8% preferred to investors, and 80% thereafter. And Class C is 7% with 70% thereafter, 50K minimum. Projections, annual return year 1, 5.22, year 2, 6.12, and then year 3, you're hitting the sevens. That year 5, you'll have 8.36. Return on investment for $500,000. This just got redone. Year 5, you'll have $41,810 return. Cap rate at 5%. Total return 1.81 million. IRR is 18.42%. Equity multiple is 1.26 or 2.16. Average cash on cash is 6.99. Annualized, that's a 23.24% return. This is investment projections for Class B. At year 5, you're at 8.36. You're putting in 150,000, so your return is 310. 783, it's 21.44 annualized return. Cash on cash is still 6.99. Debt financing, principal debt is 14,443,892. Loan to cost is 65%. Interest rate is 3.18. 29-year term fixed. HUD financing. Fees and disclosures, assessment management fee 2%, acquisition fee 2%, sponsored comp is 10 to 30%. Cost segregation, they're going to go through and they're going to do a complete cost segregation on it. So Class A will receive $260,000 in tax savings the first year. B is $66,000 and Class C is $20,000. Considering you're only putting in 50, 20,000 still good chunk. These are some pictures of the place. They're gonna renovate, new paint, some new colors. It's got a nice little kind of an outdoor gazebo area by the pool. Garden style. Number of outbuildings, 6 outbuildings and a clubhouse. It's all on concrete slab. Pitched 30-year shingle roofs. Concrete. It's all concrete paved. Electricity is individually metered, so you don't have to worry about trying to recoup some of your electric costs. Water and sewer is sub-metered. HVAC is individual. So all of that is per unit. This is kind of the overall site map of it. You can see the pool and stuff is up here. And then they've got the garages are right here. They've got garages for, I think there were garages, if I remember right, for half of the units. So there's garages available if you wanted one. Interiors, ceiling fans, balcony patio, storage areas, um, black and stainless appliances, brushed appliances, nickel fixtures, desk nooks, dishwashers, granite countertops, washers and dryers, microwave, private balcony, walk-in closets. Pretty nice, really. And that's the way they are now. This is where it's located. You've got Dallas down here, so it's just to the north and west of Dallas and Fort, kind of in between Dallas and Fort Worth. Comparable rents for the area. You can see year built 2014-19, 2001 Lakes at Louisville. So average rents are about 1662, and right now we're at 14, what I say, 1480. Principal risks, execution risk, renovation premiums. Of course, hard to tell what those are going to cost. They're planning on $1 million for it. Knowing these gentlemen, the $1 million should definitely cover what they're seeing. Debt and refinancing risk. We're on that fixed loan, so we shouldn't have to worry about refinancing. Liquidity and timing. We don't know what's going to happen to the market, just like everybody else. Forecasting and exit risk, projected equity multiples assume future operating performance and successful sale. They've got, and that's the nice thing. They're planning on a 5-year hold, but they've got the 3.18% interest. So they don't really have to sell it at that 5 years. Market rent risk. Saw that with COVID. Regulatory and lower risk, affordable housing restrictions, tax abatements. The tax abatement, I think, goes away. What did I say? Where was that tax abatement slide? There it was.
I think it 29 years, I think I saw,
Yeah,
Terrell.
20. Laura expires in 2045. I knew it was 2040 something. Sponsoring concentration risk results depend heavily on sponsor execution, property management, and key personnel. So, like I say, these guys have nine completed deals from start to finish. 350 million under assets under management. I don't really see that being a big risk. That's one reason we decided to back it. Okay, so if anybody's interested in it, review, commit, fund, and close this deal. They closed the window on the 31st of this month. So if anybody's interested in this, by all means, I'll put my information in the chat. Don't hesitate. We can schedule a call. I can send you an invite to my portal and get you going. Frequently asked questions. Okay.
So
Anybody?
does anybody
Yeah,
have,
go
yeah,
ahead.
let's like open the floor to questions. So is this, what's your role here? Like, are you a fund
My
of funds raising money?
Yes, it's exactly. I'm doing a fund of funds. I'm raising money for that goes straight to momentum. That's where I'm at right now. I'm at the fund of fund stage. So
Okay.
I'm doing funds for this one. Another one I have funds that I just got in this last week. Let me see if I can find it here. Uh, dear. Another one that I just got in this last week
Well,
is,
before you switch to that one, does anybody have
yeah.
any questions about Charles's presentation? Is this your deck, by the way, or is this their deck and then you're just
I'm,
presenting it?
I'm sorry.
Is this your deck or is this their deck and you're just kind of presenting it?
No, this is just a an investment book that I put together to send out to investors.
Gotcha. It's not so it's not a
Yeah,
standard presentation.
this is mine.
This is yours.
Yeah,
Um,
I haven't branded it though.
so I was just curious because like the pictures of the property are in the back, or
Yeah.
is there pictures? Yeah, maybe put those in the front to
Hmm.
entice people.
Charles,
Because I
I
mean
have a,
the
go ahead.
property's nice. Sorry, the property's really nice.
Charles, I have a question. You said the occupancy is at 90%.
Yes.
Why is that? I mean, it's a 2015 Class A. What's happening?
Um, I believe it's just units ready to be renovated. There is a lot of apartments going up in not going up, but they've got actually, I think Dallas, if I remember correctly, has a moratorium on new apartments. Um, but I couldn't
So
tell you exactly why they're at 90%.
do you know how many units are offline for renovation?
20%. They're doing 20% right now, or they're going to do 20% as soon as they take over. I know that. I don't know if they're renovating it right at this point in time with the old owner.
Okay.
That may be that's one of the first things that they have planned is starting to renovate the open units.
And you said they're getting it at 20 to 30% below market. Is that what I heard correctly?
20, I think 20 or 23% below market.
Is that purchase price or
That's purchase
is
price. Yes, sir.
is it 23% below what they're asking?
No, it's 23% below the market, the
Okay.
comparables in the market there.
So you said that I thought it said heard at the beginning that you said they were assuming an existing HUD loan. Is that correct?
Yes.
Okay.
And
Does this? Oh, go ahead.
they've got like 20, what did I say, 20, it's 20 something years left on that loan.
Has the sponsors, do you know if they've had experience with a HUD loan before and assuming a HUD loan?
I would assume they have. I don't know if they actually have or not.
How long have they had this under contract? Do you know?
Uh, like 3 months, 4 months.
And their closing, when did you say the closing was?
August.
Okay.
Do you know how much they've raised so far?
They're at, I think they said the last I heard they were like right around 2 million short.
Okay.
Do you know why they're selling, Charles?
The landlord just wanted the owner just was moving on, getting out of it. He goes out and he they purchase, buy, and sell. It was just time for them to move on. He didn't want to put the effort into it, I guess. Like I said, these places, the units themselves uh, haven't been renovated from to my knowledge since 2015. So, to me, it's kind of the story I got kind of sounded like the owner went in, bought it, milked it, and is now getting out of it. while he can still get some for it.
So did you say that they had renovated like 20 something units of the 140?
They're when
That's the plan.
Hayden and them, yeah, when Hayden takes over, they're going to start with 20% of the units
Okay.
as soon as they get the keys.
But do they plan to rent out all the units?
They plan to
Or
rent. Yeah, they're going to increase the occupancy, definitely. But I think they're going to take and renovate 20% of the units first. They'll take and they'll renovate them on turnover. So when they
but
get, the ones that are empty, when they get the keys, they'll take and they'll renovate those first.
what I mean is over the entire hold period, are they going to eventually renovate every unit, or just do the 20% and then quit?
No, from my understanding, their plan is to renovate every unit.
Do you know who's going to manage the property? Do they have their own, or is it a third party?
They're going to manage it themselves, is my understanding at this point, or they have their own in-house management, so it would be them.
Any other questions for Charles?
When does your window close for funding?
July 31st.
2 weeks.
So if I can give you a little bit of constructive feedback, since this is
Yes,
your deck,
sir. I'll take all the constructive feedback I can get.
and this is meant to help. So
Yes, sir.
um, if there's a way you can maybe consolidate this down to maybe
Yeah.
uh, I don't want, I mean, probably even
Five,
less
ten
than half.
slides. Yeah.
Yeah, less than half the slides. Like Jason said, get the pictures up front. Tell what it is right off the bat. It's 140 unit Class A 2015 build. Do that right up front. So that because what happens is if you don't get to that right off the bat, except for maybe your disclosure or whatever, but that's what people are wondering about. And so a lot of
Mhm.
times they're not hearing the other stuff until they hear that. So get that out of the way so that then they can kind of relate everything else you say after that to what it is that you're actually, pitching. So
Yeah, I agree. That was kind of my intent, but it it didn't work out that way.
yeah.
I planned on having a whole new pitch deck for you, but it just didn't work out.
Charles, I have one more question.
Yes, ma'am.
Do they have an appraisal on this property to verify that they're purchasing it for 20 to 30% under
I
market?
do not know. I don't know if there was an appraisal done on it or not. I can find out though.
I mean, because that's a great steal. It'd be nice to verify that because that's a huge
Hmm.
claim, right? So
Yep.
you're going to want to verify it.
Oh yeah. Yeah, like I say, a lot of this was done um on the information that we received from them. I haven't had a chance to verify a lot yet,
Okay.
Hmm.
but I will
And
be definitely before we go to close.
if I could give you a little constructive feedback as well.
Yes, sir.
You've got a lot of information, and the point is it is very relevant to consolidate and get as few slides as possible in your presentation.
Mhm.
But you're a military guy, right?
Yes, sir.
So you were trained in death by PowerPoint, apparently. And don't read slides.
Yeah.
And we fall into that. But if you go to like your property detail slides, if you could
Yes, sir.
go to that slide. And when you have a slide like that, you've got 20 data points on it,
Hmm.
and you started reading them line by line. So if you got one or two things on that slide that excite you, point it out and then go next. But the problem with slides like that is people are going to start reading it. They aren't hearing a word you're saying.
Yep.
So, but no, it's a nice property. It's weird. I think I saw that property a while ago. It's a nice property. So
Yes, sir. You are correct.
very nice property.
What did you say the purchase price was again that they're offering?
22 million.
And they're buying it at a 5 cap, you said?
Yes. And I want to thank everybody. I want to thank everybody for the feedback as well. I haven't done a whole lot of these, so I definitely appreciate it.
Yeah, no, absolutely.
Bravo, man. Bravo.
Yeah, good work. Good
That
work.
was great for your first one. Nice job on the slides.
Y'all want to see the next one?
Do you want to just show it? I don't know. Is Tim on?
You probably have seen this one.
Oh,
I have not gone through this one at all yet. I have not.
Infield,
so
they still have that?
is
Yep.
this still a deal?
Yes, it is.
Are
I
Fund
you
thought that
five.
sure?
one,
I
I don't
actually
think so.
yeah, I think that one died.
actually went down and toured this property
Yeah, I think
for
this died.
TR3, but I don't think they've got it under
Yeah,
contract.
No, I think they jumped away from it because they couldn't.
yeah.
Well,
This was a bank owned, I believe, right?
this is the one Matt sent me to
I think
raise
I
he might have
think he
sent you the
sent you
wrong
the
one.
wrong one. Yeah, I think he probably meant to send you the one from Austin.
They're doing one in Austin right now.
Yeah, Fund 6.
Yeah, I don't think this is. Last I heard, this one is not. That was only
Uh,
what, a couple days
okay.
ago.
I believe you. I'll get with Matt and get it straight.
Yeah, just double check. I mean, it'd be interesting if it's still a deal. I don't think so, though.
Well, it may have come back to him too. You don't know.
Yeah, this
Uh,
is
But
true.
let's see.
it's been out of their cycle for a few months now, I think.
I thought it was Village de Soul. Villa de Soul or something like that.
Yeah, that's the Austin deal. That's why I
That's the
think he,
Austin deal. Yeah.
yeah, which is why I think he maybe sent you the wrong deck.
Wait a minute. Wait a minute. Wait a minute. That one.
That makes more sense. Yes.
Yeah.
Yeah.
Warrior Hole. Yeah, I wanted to have the spreadsheets for um the Devonshire deal ready too, but I didn't get that far either. All right. Well, I thank everybody else. I thank everybody a lot for allowing me to share.
Thanks, Charles.
Absolutely. Yeah. Thank you, sir. I appreciate that. If anybody has any questions, why don't you put your information in the
Yep.
chat?
I'm going to do that now.
Oh, Pat's clapping. I thought you had your hand up for a question, Pat.
Oh, it was well done. I mean, it looks like a beautiful property. I'm a little
It
jealous
does.
it's not closer to Michigan.
Yeah, as I say, I think a lot of the properties that are nice looking are not in the Michigan market for the most part. We keep seeing stuff outside of Michigan. Hey Charles, that just one quick note from what Kevin was saying, that TR3, that second one, even the first one, the TR3 deck only had like 5 or 6 slides. So you might take that as a model for yours and kind of massage your PowerPoint deck around.
Yeah, like I say, that's not what I had originally intended to present, but it was down to the point where it was that or something that was worse than that.
Yeah, just good examples.
Thank you very much.
Good job though. Good job.
Yeah.
Thank you.
All right. Tim, are you here?
Yes. Yeah.
Hey, how are you?
Good. How are you,
Wow.
Jason?
Good, good. Nice to meet you. It says your name is Sylvia, but we'll go with Tim, right?
Yeah, yep, filling in for my wife.
Yep.
Yep, thank you, Teresa, for the invite. We had attended the Family Office Club conference yesterday.
Awesome.
So excited to be here.
Yeah. So we run this call, and Teresa probably told you that we run it every Friday night, 7 o'clock. Tonight is we'll call it Bring a Deal, where
Yeah.
you can pitch what you have. You can share your screen, and we're ready to listen.
Okay, sounds good. Thanks, y'all. Thanks, Jason. Can you guys see me all right here?
Yes.
Okay, awesome. Project that we're looking at today is West University Garden. It's 128 units at a purchase price of 13.8, with 16% LP returns and a 1.96 equity multiplier. A little bit about myself before well, I guess obviously disclaimers, 506C offering, and so on. So a little bit about myself before we go into the property. I go by Tim. My wife Sylvia and this is our first raise. I have myself 5 years in corporate real estate, worked for a single family fund in acquisitions and then asset management for 2 years, worked as a federal employee for HUD and GSA in the Public Building Service. And now we're looking at deals. So I've been underwriting since 2021. Felt like this is a good moment in the market. Obviously, some other deals have good discounts, and so we're very excited about this one. This is in Bryan, Texas. For those, obviously, Bryan, Texas is right next to College Station. So a good market, good anchor tenant with Texas A&M. And this is workforce housing, so we don't face the issues with student housing and the seasonality piece. This one is 97% occupied currently. It is 1994, 2010. It's a B minus, class B minus asset. And it has 8 buildings that are built in 1994 and then 2 that were built in 2010. So good mix here of studios, 1x1s, 2x2s. And overall, like very, very happy with the overall condition of the asset. I myself have like a good construction background. So when we were walking the site, the previous owner had made a lot of, took a lot of care. We, did like a 40-minute interview with the maintenance manager. And, he kind of explained the situation with the AC units, that they, regularly scope and jet the lines in March through all of the units. So all good signs with, a 1990s plus asset that we're not going to run into, issues with plumbing and electrical. Sponsorship team here, Adelia is the one who found this deal. She already has another asset in this market, about 20, 30 minutes away. I believe it's 30 to 40 units and they're ready to refi already. They had purchased it last year. She has a background in, she had worked with some private equity, bringing WeWork to Spain. And she's partnered with our principal, Amar, who has a pretty good commercial real estate background in multifamily senior housing, so on and so forth. And then Charlie Peters is our advisor. We looked at his deal flow. He's in about 20 multifamily deals since 2008, I believe. And then that's me. So, like I said, 16% LP returns or 16% on IRR, 1.96 equity multiplier. That should be 12% preferred for pref equity if there's, like a family office interested. Strong cash flow, 8.5% cash on cash. And again, it was about a 72 BIP difference on the cap rate. We had a 700K discount to what the owners were asking for. Market is at 6.5. So multifamily is trading at 6.5. We got it at a 7.2. And for the underwriting, the thing that stood out to me the most when I was reviewing it myself was that we're continuing to assume that cap rates are flat, which is good and conservative, right? If you're looking at multifamily, if you're looking to invest in it, you might assume that cap rates would compress. But our base case is that is not to assume that cap rates will compress, and to look at the numbers from an angle of well, we want to be very conservative on deploying capital. We don't want to, fix these into premium units. And that's really the big selling point here is it's just not where we're really building and raising on a base case that is just on this idea that we got a discount at the onset and that there is a loss to lease because the owner was part of the original ownership group. They've had it for 10 years. In 2024, he bought the property from the original group, and then he did some renovations and then leased it up to 97%. So that's why we have a 10% loss to lease on average to market rates, and that's why we're going to do some market testing when we raise it up to market rents. So Brian in College Station, like I said, A&M, you guys may or may not be familiar with Aggieland. There's some defense contractors in that space. Pretty good population growth, 2% per year. Obviously, student population, and then the big one was that SpaceX just got through their final round of approval with the city. So some semiconductor chips and defense contractors. So good space and it's growing, right? So I think that the macro in a secondary market that's not over allocated, that's what might stand out to some investors on this deal. Is that, whereas we all know that in Dallas, a lot of capital has been over allocated and it's hurt a little bit more. This is an area that continues to have stable employment and is a good secondary market to invest in. Value add. So we're planning on renovating 88 of 128 units. So about, 68% of the units leaving, meat on the bone for the next purchase for our exit strategy. Currently, you can see some of the unit condition in here. There's the pool, well maintained, all the buildings. When you walk the site, there's no obvious signs of runoff. There's no cracking in the foundation. Well maintained. They just replaced the railings prior in the last 2 years and made sure that there's no cracking in the cement or anything like that. So pretty standard finish inside. As far as the value add piece, we're looking at first testing. So that we didn't build the base case scenario does not include the rent growth from unit renovations. We have 400,000 set aside for units. It's about 2,000 a unit. A little on the thin side, I would say, from my personal perspective. But then we may not need to renovate all 88 units, and so there's a little bit of room for play there. Even for me having a background in asset management for a single family rental fund, right? We don't want to overdo. I would say that it's wise not to overdo this. We could change some of the doors out, do the paint. I think the biggest expenses would be around shuffling around some of the appliances and making sure that those things are updated. So there's some deferred maintenance, like we're considering on the water heaters and the AC units, but we have enough, in my opinion, we have enough play on we've included the original maintenance. We put a 2 to 3% growth factor on those expenses. So we maintain the current T12, and then we have the 400K CapEx budget. Other things to note. Oh, oops. Let me just get back into my slide. We have local property management. So for the other asset that our sponsor owns, they're going to be managing this property. So I interviewed her when we did our due diligence 3 weeks ago. Very knowledgeable. They jumped right to it when someone came in to do a tour, and they're aware of seasonality. So in this market, seasonality is roughly from February to August, a little bit before then, actually July. And when we talked about when we're looking through some of the lease lock and what was being offered, they had a pretty responsive and specific answer, in my opinion, on what the plan would be to lease up. So, and of course, third point here, we've talked about that 40 units so that we have an exit. Rent comparables. So the Lori is right up the street. These are all kind of Class A, and Enview is BC, right? So our in-place rents are already sitting at a discount to what the market is. So even our 2 bedrooms, I think this is where there's some data missing from here, but you can see on the 1 bedroom and the 2 bedroom that there's a decent amount to raise rents here. That was part of the story where a year ago the previous owner was leasing up, and so he did some discounted rents so that he could have it at a high occupancy rate. That was to maintain occupancy so that the agency loan could be assumed. But overall, across all the units, it's about a 10% loss to lease to market. Our renovation premium is pretty moderate, I think. I think it was $40 for what we were looking to do with a $2,000 investment per unit. Let's see if this slide shows it fully. Yeah, so it's basically $100 to $180 gap depending on where we would raise the units. And then I myself have looked at the rent roll, run an analysis on that as well in terms of how would we test that. Sensitivity chart. The growth rate assumptions for year 1 through 3 are 1, 2, and 3%. Like all the other markets, there was some pretty strong market rent growth. According to the CoStar report, in 21 and 22, it was like 8 and 10%. We wanted to be conservative. There was a slight drop last year, and then I think it was like 2% the year prior. A lot of data just to say that we're, on average it was 4%, and we're assuming that year 1, 2, and 3 is 1, 2, and 3%. Again, flat exit cap rate. And something to note here on the side too that I really liked about our underwriting was that we assume 12% economic vacancy across like loss to lease with concessions, physical vacancy, and then also turn time for the renovations. So that's the baseline assumption is about 88% occupancy. The loan's 10.35 million. We're raising 4.7 million. It's fixed rate 5.65. Interest only for 3 years. And then you can see here, year 1, 960K. Happy to go into more detail here if you guys want to ask questions here. Some things to note, obviously year 4, that's when debt service jumps up because it's interest only for 3 years, and our net cash flow drops down a little bit. This is our pref equity chart and the LP investor on the right. And then another chart that we can look at a little bit more closely if there are more questions here. Cost segs. So you invest 100K here. We've already done the cost seg. We got a preliminary quote from 3 folks. Right now it stands at 28 to 46K on tax. As far as like tax savings, if you invest 100, still haven't myself really dug into it, so just want to be upfront about that. But that's already in the works. And that's it. We're gonna have another meeting next week on the 22nd, where Adelia is gonna lead us through that conversation again. But thanks for listening, everyone.
Yeah, thanks, Tim. So like what's the minimum investment? And maybe I missed that, like the minimum investment and the return on that.
Oh yes, it's 100,000.
It's
And then
100,000.
yeah, and then preferred equity is 250.
Yeah. Could you
Can you
go
go
back
back?
to those? I'm
Yeah.
sorry. Yeah, go back to the
Yeah, I was gonna,
returns. You
yeah,
spent a
that
lot of
exactly
time
what
on
I
all
was
the other
thinking.
stuff and then blazed through the returns.
Yeah,
Yeah,
if you
apologies.
can you go to no, the other one that showed the one more, I think. Yeah.
Okay.
That one.
There you
Sorry, this
go.
one right here.
There
Yeah.
you go. Sizzle that.
So, okay, so option one is 250, you're saying, and then option
Yes,
two is 100K.
that's
And you're
correct.
saying that there's a 12% preferred return for the option one,
Yes,
and then an 8% on option two,
that's correct.
plus upside. Okay.
Might have gone through that a little too fast, I see.
Yeah, I was just trying to, I thought I heard it, but I just wanted, I think you did go through this one slide a little quick.
Yeah. Thanks for asking, Jason.
Tim, who are you guys planning on having manage this? Is this a third party or in-house?
Uh, so this is the property manager that Adelia already has working on. It's third party.
Okay.
We're
You
gonna
have dealt with them. She has dealt
yes,
with them before. Okay.
yes. And then as far as the asset management piece, I would be participating on that. And then we have another guy here, Dallas base, that would assist on asset management as well, as far as surveillance goes.
And then third party maintenance, renovation,
There's in-house maintenance.
in-house maintenance,
Yeah.
and the renovation as well, or
Third party maintenance right now, though that's still up for discussion. We already have quotes from a third party, so
for the renovation.
that's correct.
Okay.
So, Tim, can you tell me a little bit more about this cost segregation? You said that the study for this property is actually already underway.
They got 3 quotes.
So that's to
So
do the study.
that's correct.
Okay.
Yeah. I admittedly have not looked at the docs. I just know that the last call that we reviewed this with Adelia, it sounded like we had some preliminary numbers in. That's why we have that up here.
So that's what I guess that's what confused me because you're saying they're kind of giving you a little bit of a range for an estimate of the amount of depreciation you would get for a 100K investment. Is that what the 28 to 46 is?
Yes.
They're just kind of doing a projected um, depreciation amount for that.
Yes, I believe so.
Okay. I've not seen a projected one before it was actually done. That's why I was asking.
Hmm.
That's interesting.
Anybody else have questions for Tim? And then you can, if you want, Tim, you can put your information in the chat.
Okay.
We usually post this recorded, so it usually goes out on our YouTube site too. So
Thank you, Tim. Solid presentation.
yeah, that was
Thank you
very
so
good.
much. Appreciate y'all.
Thank-
There we go. Let's stop sharing.
All right. Well, Tim puts his information in. Does anybody have any questions just in general about anything then from a real estate standpoint that they've learned this week that they were curious about, that they want to ask?
Or something you're working on that you're excited about?
Yeah.
Give us some good news.
So I would like to comment, and I think Denise is still here.
Oh yeah. Didn't you just go look at something?
Ah, she jumped off. Rats.
She was on,
So
yeah.
yeah, she was. Well, I got to give her credit. She's it's a new world to her, and she had been watching this property. It was near where she lived. The challenge with the property, and you may have seen it came up on another call, was that they have 48 units complete and 20 to be delivered. They're saying by the end of the month. I just walked the property. They didn't. They're saying this month. I think it's more like next month. But they're basing this whole sale on anticipated, 100% occupancy, which is sounds nice. They say they have a wait list for people, blah blah blah. The challenge is the financing on that because it's, you only have your NOI from the existing units. And the split on the property is 20, well, it was 20 new, but 48, they're B minus proper, B9, B minus, and they're underwriting it at the top of the market. They're underwriting the whole thing like it's class A. Replacement cost on the high end is just over 200,000 per unit in that market. They're writing this thing at 220 a unit. So I don't say it's a non-starter, but Denise really put herself out there and did a great job. I wanted to compliment her in person, setting up the meeting, questions. She came on calls, followed up. I mean, these are clues for people who are looking to step in. She got involved, got questions, took a lot of notes from calls she was on. I was on 2 different calls where she talked about this property. And when the masters gave feedback, she put that into a list of questions and hit the broker with specifically like verbatim these questions. And it was good because it came across the way she did it was really good. And ended up, was the VP. I think it's like the number 2 person in CBRE in that Madison market. So I made a connection I wouldn't have made, and it was a nice property. It was a great opportunity, and Denise kind of backed off on it for a couple reasons. It's a little hairy of a project for a first project, but it was a great opportunity for her. I just wanted to give her kudos for stepping up. But if anyone wants to walk a property, and I travel for barbecue.
You should travel.
No, if anyone's looking at walking a property and they need someone to walk, I'll jet out. I got no problem with that. I enjoy it.
And if you don't know, Kevin does have a call on Sunday. I guess you can call it afternoon-ish, evening, like 4 o'clock-ish.
Yeah, 5 Central.
5 Central. So
Get your week started. Thank you, Jason.
it's a great call. So you all should join. Thank you, Kevin. And I'm texting Denise now, like, hey, look, Kevin's talking about you. It's all bad.
She's probably dialing in right now. What's he saying?
All positive, all positive.
Always positive. And your unicorn changed. I don't know. I think I like the other unicorn.
Well, this was I was playing around with a little AI, AI fun. So this is a logo that I created or AI created for me because I wanted to integrate. The word I use is integrate the unicorn into its logo. And it's goofy as hell, but you know what? It's me. It's all good.
As long as it's you, it doesn't matter. They're buying you. They're not buying the
No one
logo.
else has a logo like that.
All right.
Yeah.
Awesome.
I'm gonna drop my Sunday call link in the thing there if you don't mind.
Yep. Absolutely.
You can find it.
While Kevin is doing that, anything else that you guys might have? News, questions, comments?
Who's going to be in Florida next week?
Who's Teresa's going to be there.
Me and Rob will be there, Kevin.
Yeah.
For the business summit or just real estate?
Real estate and the capital raising.
Okay, I'll be joining you for that. I was going to be at the business summit, but I have a family obligation. It's priorities. So I'm sending my son. He'll be at the business summit, getting his fill of Grant and team, and I'm excited for him. He's going to his junior year at Arizona State, so he'll be there through the real estate summit with me too. So please be sure to give him some harassment for me when you see him. Yeah, I'm excited for him. We're blessed to be able to send him. So
That's awesome. The younger he starts, the better off he is.
yes, sir.
I think Bill jumped off, but Bill's going to be there too. Bill Dalton.
Perfect. Well, look forward to seeing those who are going to be there in person.
I would love to, but my daughter decided to turn 18, so we have to have a
And
party.
I'm looking forward to what the opportunities are coming up in Kansas City.
Oh, and they're good ones too. So we're going to
Awesome.
leave that one for you guys to wonder about how awesome they are. So
There's a lot of stuff. Chicago is starting to light up. I mean, that thing in Madison, it was kind of it's a nice property, but there's stuff starting to show up on market and off market. So it's everything
yep,
they're
I was
saying
just
is
saying
true.
exactly what they predicted is
It's
happening.
raining
So
properties up in here.
mhm.
Yep. So the Midwest is hot. Don't let those
Midwest is the
don't
place to
don't
be.
let those people down in the sun. Their brains are getting baked. We got none of that up here. We got
They
our own
are.
heat.
I'm telling you, they are. I'm
And
getting baked, so they
yeah,
are.
and you guys, yeah, Pat and Rob over there in Michigan, come on, man.
Yeah, we're starting to see new stuff come online, Kevin, this as of like this month.
I was
Um,
to say you're saying there's nothing there, dude. That's your job. Find it.
no, I go through and I look every week for new properties. I've got an agent in ChatGPT that goes through and scrapes the top 25 sites and gives me the new listings, and it keeps the old listings in memory, so it's only giving me the new stuff that's showing up.
Got it. All right. Now I had I don't know where it was, but just last week or two, someone was talking about REAIOU. I don't know, real estate associations and stuff like that. And
Yeah.
now when I did the single family thing, that was it. You know, you go to all these little things and everything. So I went to look, and there's a guy up here in Chicagoland named Andrew Holmes. He owns REAI or whatever it is in Chicago. It's all single family and wholesaling. And I'm
Yeah,
like, do I go?
it's RIA, R-E.
Ria, thank you.
It's RIA.
I didn't, yeah, Ria. So anyway, what kind of opportunities are out there? I mean, for you guys, what are you guys seeing in terms of networking and I mean those kinds. I'm finding some multifamily opportunities, but it's not. I mean, usually it's someone selling their thing.
So what
Uh,
I mean, I can tell you about the RIA because I go to the RIA here.
you were talking
Um,
about that. That's right. Yeah, yeah.
yeah, and they asked me to do a multifamily conference for them. And so I think there is opportunity. Yes, there are wholesalers, there are single family people, but it might be a niche for you to get yourself in to start
I
pulling in
like
other
that. Thank you.
people. So
Yeah. Well, the thing is, you got to. I mean, it's like to go to things like $50, and I got to drive, you know, to get there.
yeah,
So it's kind
mine's
of.
$50, but it's like 3 miles away, so it's not that
Well, see,
bad.
there you go. That's dinner, right?
No.
Oh, you
But
like
there's
to
good
travel,
pizza out there.
Kevin.
I'm sure I could find pizza. You notice I'm a little food centric, right?
It sounds like it. We went from ribs to
Hey,
pizza to
that
barbecue
that River Grove
to
station that I was pitching was like a mile and a half away from one of the top hot dog places in Chicago. So
now
that
we're
was
on hot
part of
dogs. Gotcha.
that was
Kevin's
part of my
picking his
pitch. But
properties based on food. I see.
What
Okay.
well,
food is in the
I'm
area?
down there. I'm pitching to Grant. I'm trying to sell him hot dogs, and he's over there arguing with Ken Gee. I'm like, dude, I'm talking Chicago hot dogs here. Couldn't get it out.
You need to get a property by a Michelin star restaurant now.
Well, there's that. Yeah, Michelin hot dogs.
There you go. I
So,
don't think that's ever gonna happen.
so Jason, do we need to do a commercial now for some coaching?
Oh yeah, go for it.
Well, that was subtle, Tim.
Huh? Well,
I like
we
it.
talked
Be
about it.
bold.
We talked about it. So
Yeah,
We
go
did.
for it.
got to
We
jump right
did.
in. So yeah, just while everybody's still on here, if you are looking to do a little more detailed coaching, getting some more insight and on a deeper level than what we're able to on these calls, um, I do offer now. I've been requested by many people on this call to do this, so I've kind of started doing a regular coaching call. I do it one on one. I'll do it with a group if you have partners of up to 4 people. Um, and I basically do one 90-minute call every week. I basically cover the 12 most critical areas of multifamily, everything from starting out and developing your biography, the how and the why, determining your market, how and the why, developing your business plan, dealing with brokers, finding and acquiring deals, touring properties, some of the do's and don'ts of that, And of course, underwriting, that I get into quite a bit of that. That's a heavy focus on this. And in addition to the underwriting, I provide you with the model that I use for that and go over how to use that and provide it and let you use that from then on. And then how to structure a deal and raise capital for deals, everything, including capital raising, the legal part of it, investor communications, presentations, pitch deck development, and in line with that, we may have some guest appearances by some of the other people on our team. If they're a little more of an expert in some of those, especially like SEC requirements and those types of things. We can talk about property management, insurance and property taxes, due diligence, and then the lending process and the requirements for that. So anybody's interested in that, give me a call or send me an email and we can talk about getting something set up for you.
Tim, you have several people you've already worked with, right? That if they wanted to kind of check with somebody else and
Yeah.
see what they thought, that they could do that.
Yeah. We've had some of them on this call before. Steve Thrope and Elaine Yee are some of the people that I'm helping out right now. There's another guy named Albie. He's not usually on. He's been on this call, but he's not usually on here now. He's actually in part of Grant's program as well. Then some other people, I haven't asked them permission to tell them whether they're doing it or not. But yeah, there's at least two other groups that I'm working with as well. So, and I do have limited spots on that since I do one-on-one. So, but I still have room for maybe three or four more groups or individuals.
So reach out to Tim. It's definitely an awesome opportunity. So where's your contact information, Tim?
Oh, shoot.
Yeah, your phone number's not in there.
I don't know why that keeps dropping off every time we start this call.
I think back to when, like I went through all Grant's programs, right? I mean, how to buy apartments and all his modules. And I mean, I was just soaking up everything I could. I listened to as many podcasts as I could, but I don't know, I got to that point where I'm like, okay, now what, right? You feel like you've got that over level, you kind of understand the basics, but you're not really sure how to put it into play. So, I mean, if that's where you're at, then Tim is a good next step, and he's engineering background. I always give him a hard time because details are his thing, and he wants to know how they work, how everything works. And so he definitely has put together an amazing program that, it's really is a good next step. And it's not something that is going to take you forever. You make that investment, and it's kind of like the grant thing. You make the investment in the front end, and then, you've got that to build on to go forward
Yep.
with. So I would definitely recommend working with him if you're ready for that next step.
Yeah, that's you reminded me of some other things that so that's kind of what the purpose of this is. It's kind of along the same lines of what this call is about, but it kind of takes the things you hear about on the other calls and takes them down to other levels that you don't get to on the calls. But the main goal behind it is to shorten that learning curve. Everybody eventually gets there that sticks with it and stays committed. But if you do it like we did, we kind of fumbled our way through and struggled and got over all the hurdles and all that kind of stuff. And so our idea behind what I'm doing is to help shorten that time frame that it takes to get to the point where you're ready to do the first deal. So yeah, that's kind of what the purpose of it is.
I definitely highly encourage it too, because I think all of us, that 10,000 foot is just not enough. It's just what is, like what Teresa says, what's next? Like, okay, now what do I do? And I think Tim guides you in that direction. So awesome. Well, reach out to Tim. His contact information is here. It's also in the chat. He can connect you and work with you guys. Obviously, we'll also be on next week to talk as well. So we appreciate all you jumping on a Friday night. Thank you guys for joining, and we will talk to you next week.
Good night.
Good night.
Right.
Thank you.